Today's Talk About It Tuesday question is, why are so many young men drawn to prediction markets, cryptocurrency trading, options trading, and other high-risk investments when the older, safer investments like index funds, bonds, and REITs have proven to be profitable over the years? Oh, great question. It is very frustrating sometimes when I try to advise young men in particular, young people, but young men in particular, about the traditional ways that we have seen proven to be successful in growing your portfolio. I can talk to anybody in their late 30s, 40s, 50s, 60s, and tell them to invest in these safer investment vehicles that are well diversified to mitigate risk, that will benefit from compounded growth over a long period of time, and say that in 10, 20, 30 years, you will have amassed an amazing nest egg, not by checking constantly or doing a lot of activity, but just by being consistent and boring and safe. That sounds terrible to a young person. So when you're talking to a 20-something-year-old and you say in 20 years you'll have, that sounds like forever, because for a 20-something-year-old, 20 years is forever. That's the bulk of their lifetime, and they can't imagine what 20 years would be like. They can't imagine having 20 years already passed by. So when I speak to somebody 40 and they talk about 20 years ago, it seems like, it was a blink of an eye 20 years ago. So they can talk about in 20 years from now. So there are biological, sociological, and technological reasons that is also extremely attractive. So biologically, again, when you're talking about a young person in a sense of time and future, but also with young men in particular, especially men who haven't reached the age of 25, the frontal lobe of the brain isn't fully developed yet, which is the judgment portion of the brain, which is the risk-taking portion of the brain, coupled with a high level of testosterone. And you're talking about a recipe for disaster. High risk, aggressive, competitive, with poor judgment at the same time. So biologically, young men, have an issue in that regard. They want aggression. They want it now. They want to take risks. They feel empowered. They feel invincible. They feel like they can't lose. So there's a biological aspect to it. There's a sociological aspect to it. They want it now. When they don't see a pathway forward because of high inflation, not a lot of job prospects, where they see their parents maybe struggling. It's the same as the person who plays the lottery. I want to take a big gamble and hope for a windfall, and I want to strike it rich, and it's going to solve all my problems. So there's a sociological aspect of that. There's social media that rewards the perception of success, not the process, right? Have this money so you can get these luxury things and live this luxury lifestyle. There's social media that promotes those type of and I wouldn't even call them investments, those type of risky endeavors. There are so-called wealth gurus who are promoting it. There are YouTube, videos. There are groups of young people who are saying, "Hey, watch me trade, or we can trade, and we can do this." There are multi-level marketing groups that will bring you in to do that. So there are all these pushes through social media and the internet that are pushing kids that way. There's also technology in the sense of it's so easy. You can do it on your phone. When I first started investing, you needed a stockbroker to invest. There was no smartphones. You could do it on the internet. That didn't exist. And now they're walking around with the capability and the tool to be able to make a transaction in real time on their phone. And they can keep checking it. And the way the apps are designed, they look like games. They've been gamified. They have communities attached to them. They have all these things that emotionally are alluring and keep you engaged the same way the casino does. And so, and even change prediction market. It's betting, right? They even changed the name prediction market to make it sound like it's something more than just betting. And the crypto, the whole, the sociological aspect of not trusting institutions and the things of the past. And so we're going to go outside of the institutions and do crypto, and we're going to abandon all that old stuff that the old folks do, and we're going to take on this new thing this is going to be our strike it rich thing, like oil was for people back when oil was discovered. So there are all these forces compounding. So biological, sociological, technological, and the list goes on. There are more things that keep drawing them to these things. So it's hard now to counter that and say, well, growing wealth is not exciting. It's actually very boring. It's actually just about being consistent. And over time, right, in 20 years, you'll have, that's not exciting. It doesn't sound appealing. It doesn't give them the dopamine hits that they're looking for, because for young people, it's not about the winning part, right? It's the gamble. The dopamine hit comes from the options trade that almost hit it big, not the one that hits it big. It's from the crypto when it goes up, but not when they cashed it out, right? So the dopamine hits they're getting from these things also is a huge factor that traditional stuff can't compete with, because you don't get a dopamine hit from something that's going to manifest in 20 years. So, those are some of the forces that, draw them to it. I don't know really how to counter that, because they don't have the life experience of having lost in these things yet, where it's impactful. They don't have the life experience of now being 40 and having nothing to show for it. They don't have the full development of the judgment portion of the brain yet. All these things, they don't have the waning of testosterone, right, as they get older. So all these forces are what draws them to it. It's not that they have some new insight that older folks don't have. They don't have the experience. They don't have the knowledge. But biologically, technologically, and sociologically, they're drawn to these things, and they'll probably just have to age out of it like most of us did. Most of us didn't do what we were told in our 20s. We were told save. We didn't save. We didn't even do that. And that was simple. We didn't save. We didn't invest. We didn't do anything. And we started much later. So I do give them some grace in that regard, because it's a struggle to go against all those forces. But that's pretty much the reason. And again, I summarized it there. We can get more nuance. We can get more in depth and talk about, how complex it is. But that's it in a nutshell. So I'd like to hear your thoughts on it. But please like, share, subscribe, keep the questions coming, and I'll see you next Tuesday.